Okay, Bismillahirrahmanirrahim. Let's start with the today's session. Today we are going to discuss with IAS 21, and the name of this standard IAS 21 is basically a foreign currency transaction, but officially we also called it as IAS 21 is basically a changes, yeah, effects of changes in foreign exchange rate. Foreign exchange rate. There are a few important things that we need to understand, and then we are going to practice it out. What does it means? That first of all, now the world is like a global village. We are purchasing, we are selling goods, not within the country, but obviously outside the country as well. So if we are purchasing some goods from some other country, it means that purchasing is known as what? The import. That purchasing is known as what? The import. And if we are selling some goods to outside the country, so it means that selling is known as what? The export. That selling is known as what? The export. So it means definitely we are having some import and exports throughout the year. The company definitely will be purchasing some goods from other countries, and obviously it will be selling some goods to some other countries. So what we are going to do, what is the problem? Basically the problem number one is that we are purchasing, or we are having a transaction, we are having a transaction we are having a transaction in international currency, to which we call it as foreign currency. I repeat, we are having a transaction in foreign currency, that is the international currency, and obviously we are making payment, we are receiving the amount in the foreign currency. But if you are recording that transaction, if you want to record that transaction, it will be in the local currency, or to make it more technical, we can call it as the presentation currency, or we can call it as a local currency, as a presentation currency, or to make it more technical, we can also call it as functional currency. I hope that you must have heard about this terminology, right?
Yes.
So what we are doing, we are making a transaction in the foreign currency, but obviously if we are recording the transaction, we need to record the transaction in our local currency. In technical terms, we call it as a presentation currency, and as per IS 21 we call it as a functional currency. So we will be recording the transactions in functional currency, that is a local currency. For example, we are purchasing the goods in dollars, so it means we are purchasing the goods in dollars, so it's a foreign currency. And I'm recording the transaction in PKR, that is Pakistani rupee. So it means that PKR is a functional currency. So what I have to do, that I need to convert, right?
Yes.
And in IS 21 there is another terminology which is used. What is that terminology? I want to convert, or the other name for the conversion is
Translate.
excellent. Yes, so we are going to translate that foreign currency into functional currency. That is the main crux of this standard, the main and the important part, that how we are going to translate. So there are some rules for the translation what I have made. uh, First of all, step number one, you need to identify in from your question that which one is your functional currency. Which one is your functional currency? First of all, we need to identify the functional currency, that what which one is your functional currency, whether your functional currency is dollar, it's pound, it's real, it's dirham. So you need to first of all identify your functional currency. Second step number two, you need to identify whether your functional currency is strong or weak, whether your functional currency is strong or weak. So we need to identify two things. Number one, the functional currency, which one is your functional currency, and the second is that whether your functional currency is strong or weak. And third step, the last step, that the translation, that is the translation. And how we are going to make a translation? how we are going to make our translation, how we are going to make a translation. In order to make some translation, or in order to have some translation, what we are going to do, we need to identify if the functional currency is strong. If the functional currency is strong, so the translated amount, the converted or the translated amount will be higher in number or lower in number.
Higher.
Yes, it's going to be higher in number, right? No,
Yep.
it's lower in number. It's lower in number.
Isn't the stronger number the higher one?
No, basically the stronger means your functional currency is strong. So if you will convert, if you will translate, let me give you an example for Pakistani. I hope that you are aware with the Pakistani culture or Pakistani uh, economic condition.
Yeah.
Okay, that's why you're not coming here. Okay, for example, um, let me compare Pakistan with US. Although it's very impossible, but right now I'm comparing the currency. For example, if I bought 1000 US dollar goods, okay, and right now the exchange rate is rupees 279 or 277 equals to 1 US dollar. Are you getting the situation?
Yeah.
Okay, if I bought 1000 US dollar, now what I have to do first? First, I need to identify the functional currency. Assuming my functional currency is PKR. My functional currency is
Peak hour.
okay. Now, second step, I need to identify whether the functional currency is strong or weak. Okay, how can I calculate? How can I identify that whether my functional currency is strong or weak? How can I how can I do that one? For example, uh, if $1 is equal to Pakistani 279 rupees. Now, dollar is saying that I will come alone. What I usually do, you must have seen in the lectures that I will fight. I will fight. Dollar says that I will come alone. Come on, let's fight. Let's fight. What Pakistani rupee says, no, 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 no. We are not going to fight alone. We are not going to fight alone. We will bring 279 people. So who is the strong? Dollar is strong or Pakistani rupees is strong?
The dollars.
Dollar is strong, which means that my functional currency PKR, my functional currency is weak, right?
Yes.
My functional currency is weak. And if your functional currency is weak, if your functional currency is
Weak. It's gonna be higher.
weak, it's gonna be higher in number. How? Let me prove it. Let me prove it. So if I bought goods for $1,000, so what I'm going to do, I'm going to, if I want to calculate that how much amount I have to pay in Pakistani rupee, so what I would say that if I bought a goods for $1,000, what I will do, I will multiply it by 279, right?
Yes.
So what amount I'll be getting it from that one? 1000 multiplied by 279. It's 2,79,000, I guess.
Yes.
It's 2,79,000. So just see that converted this amount, once it is converted, it is translated, it is higher in number. It is higher in number. So it's proven that whenever your functional currency is weak, so the translated amount should be higher in number. As are you getting the point now?
Yes. I was just confused because I was thinking stronger meant higher buying
No,
power.
no, exactly, exactly. It's not the case, but it's something from the different aspects. If your
Oh.
functional currency is strong, so it means it's a benefit. You will pay the lesser amount. Take in that way. This is
All
the
right.
mindset. If your functional currency is weak, so it means you have to pay the more amount.
Right.
Are you getting now? Is it clear to you?
Yeah. Now I understand.
Okay, perfect. So this is something. Now, what you have to do if the functional currency is strong, so you have to see that you need the translated amount in lower. You need the translated amount in.
Lower.
Now you will decide that whether we need to multiply or divide. Now we have to decide that whether we need to multiply or divide. Same goes with that one. If your functional currency is weak, so you need the translated amount in higher, then we will decide that whether need to multiply it or by divide it. Sometimes you will get the higher amount by multiplying it, but at times you will get the higher amount by dividing it. Are you getting my point?
Yes.
Okay, now let's try to solve the question. Let's try to solve the question, and we are going to solve this question number 98. First, start with the 98.
Okay.
You know, one more thing, you must have studied, you must have learned, you must have watched that lecture that there are two items, that is the monetary and the second one is the.
Non-monetary.
Okay, can you please let me know the rules related to those?
Okay, monetary items are like payables, bank, cash, and receivables.
Very nice, nice, excellent. It means receivables and payables. Okay, go ahead.
And they are translated at the reporting date.
Very good, excellent, perfect.
Um, and non-monetary are like inventory, interest, investment property,
Good,
and they are not translated and they're recorded at the historic rate.
excellent, perfect, very good. Intangibles, investment properties. So these are never translated. These are not translated. These are not translated at the reporting date. Okay, perfect. And you must have heard or you must have learned related to rules related to dates. There are three types of dates, right?
Yes,
And the first one is the.
transaction date.
Nice, very good. The second one is the.
Reporting date.
Perfect. And
And settlement date.
okay, can you please let me know the rules related to all of 3 days?
Okay, so the transaction date is when it occurs. You record it at the date it occurs,
Good.
and it is transferred um, and translated to the spot rate, I think.
Yes, spot rate, or we can also call it as historic rate, right?
Yes,
Okay. And what about reporting? Okay, one more thing, whether there will be an exchange gain or loss?
there's no exchange gain or loss.
Excellent. At this transaction date, there is no exchange gain or even loss. Okay. Second.
Reporting date occurs when the financial statements are prepared and they
Hmm.
are retranslated, and there is an exchange gain or loss, and it's at the closing rate.
Excellent. And that exchange or loss will be recorded in OCI?
No, profit and loss.
Perfectly fine. And this will also be recorded at the spot rate. It will be
Yes,
retranslated, and there will also be a exchange gain or loss, right?
yes.
And this will again be translated or recorded in PN. Okay, perfect, excellent. Now let's read the question number 98. Uh, Sunshine is an entity with reporting date of 31st December 2001. That is the date of reporting, and a functional currency is dollar. So first step is fulfilled. Examiner gave you the clear identification that the functional currency is dollar. One more hint. One more hint. You just see that this transaction is given. This transaction is given in 30 million dinars, right?
Yes,
So whenever the amount or the transaction amount is given in whatever the currency, so this will be always a foreign currency. This will always be a.
foreign currency.
Are you getting a point?
Yes,
So this is a clear indicator that if there's a dinar and the amount or transaction is given in dinar, so it means it's a foreign currency. It's a foreign currency, and obviously the other half or other way is going to be the functional currency.
all right.
Okay. On 30th June 2001, it purchased a land from overseas at a cost of 30 million dinar. What I told you, that we are going to have transaction in the foreign currency, but obviously we need to record it in the.
Functional currency.
Nice, very good. The land is an item of property, plant, and equipment and is measured using the cost model. Perfect. It means we are using the cost model as per IAS 16. Now, exchange rate are as follows. The exchange rate between the dinar and the dollar, $1 is equal to 30 dinar at 30th June 2001. When such transactions arises at 31st December 2001, this is, I guess, the date of reporting. Yes, it's the date of reporting, and it's an average rate. So there is no use for the average rate. We are going to ignore it. Average rate is not relevant for us. Either we are using the spot rate or the closing rate. Now, the fair value of the land at 31st December 2001 was 32 million dinars. Now, what is the carrying amount of the land? Although here it is asking for the carrying amount for the land, but we will be solving the whole question so that we have a good understanding of that IS 21. So we'll be taking all the aspects of that one. So first, question number 98. Yes. Okay, first of all, you'll be definitely helping me out. First of all, we need to identify the functional currency. Step one. So, which one is a functional currency?
The dollars.
Nice. Step two. Identify the functional currency is strong or weak. Yes. Can you please identify whether the functional currency is strong or weak?
It is strong.
Excellent. Let's have a fight. Okay, let's have a fight. Whether you want to be dinar or dollar.
Dollar.
Okay, clever. Let me. Okay, I'll be the dinar. Okay, so come on, let's fight. It means you said being a dollar that I will come alone. I said no, 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 I can't. I will bring three people. It means dinar is weak and the dollar is strong. It means the dollar is strong. Your functional currency is strong. So if your functional currency is strong, so the translated amount should be
Lower.
excellent. Now, will you remember this one?
Yes.
Okay. Step three. Step three. Now we are going to translate it. We are going to translate it. We are going to translate it. First of all, let's translate on the transaction date. It's 30th of June 2001. We'll make an accounting entry for this one as well. 30th June 2001. We bought a land for 30 million dinar. 30 million dinar, right?
Yes.
So 30 million on 30th June, the exchange rate was 3. So we need the translated amount, and obviously it will be lower. It will be.
Lower.
So what are we going to do? What are we going to do? Whether we are going to divide or multiply 3.
Divide by 3.
Very good. Once we will divide it, so the translated amount will be lower, right?
Yes.
So it means on 30th June 2001, we are purchasing, we are purchasing, we are purchasing a land for 10,000, 10 million dinar, right?
Yes.
Okay. Now, if you want to make an accounting entry, can you please suggest me an accounting entry for this one, that how it will be recorded on 30th of June?
I'm not quite sure about the entry.
We are purchasing the land, and that is on credit.
So we credit the land by
No,
10
we
million?
we are purchasing the land. We are purchasing the land, and if we are purchasing the land, it means land is increasing, right?
Yes.
Land is an asset, and asset is increasing. So what we are going to do?
We will debit it?
Very good, nice. Land will be debited by 10 million, 10 million dinar,
Yes.
and we are going to pay that amount at some other date. So it means accounts payable will be credited, right?
Right.
So this is the accounting entry that we have made on 30th of June 2001. Okay. For the year ended, no amount has yet been paid. And now what we are going to do, that we are going to on 31st December, that is the date of reporting. 31st December, that is the date of reporting 2001. 2001. Remember, you just told me that the land is a non-monetary item, right?
Yes.
First of all, it shall not be retranslated, right?
Right.
No retranslation, no retranslation. It will be recorded at its historic rate, which is it will be recorded at 10 million dinar.
Right.
Second thing is, second important thing is that company is using the cost model. Company is using the cost model, so it means it will not be recorded at its market value.
All right.
So it means the fair value that is given at the end of the reporting date, we are going to ignore it. We are not going to make it. We are not going to record it.
All right.
So what we are going to do, sorry, this is, we are making transaction in dollars. So what we are going to do, what we are going to do, we are not going to make any adjustment for the fair value. Why? Because we are recording that land at its cost model. So any fair value or the market value that is given, we are not going to entertain it. We are not going to entertain it. Why? Because we are recording that asset at cost model. Are you getting a point?
Yes.
Okay. One thing more. If this amount is outstanding at the end of the year, so it's 30 million dinar, and at the reporting date, what is the exchange rate? What is the exchange rate?
It's two.
It's 2, so it means divided by 2. So what is going to be the amount?
$15 million.
$15 million. So my liability will increase or decrease?
It will increase.
It will increase by $5 million.
Yes.
So if it is an increase in the liability, if I'll be making an adjustment at 31st December 2001, so liability is increasing. So whether it's a gain or loss.
It's a loss.
Very good. Why? Because the liability is increasing. It's not a gain, it's a loss. So that is known as what? The exchange loss. And how we are going to recognize that exchange loss? So the exchange loss will be debited and accounts payable as the liability is increasing. So liability increases credit. So we credited the accounts payable by $5 million. Are you getting a point?
Yes.
Is it clear to you now?
Yes.
So what will be the answer for this one, by the way?
10 million.
Right. Did you got the point?
Yes, I got it.
Okay, let's have another question. Try this one, 101.
Okay. Yeah, I got it until 10 million, but I'm confused if there's like an apportionment or something.
Okay, no problem. Let's have a look on this one. A manufacturing entity buys a machine, an item of property, plant, and equipment for 20 million dinar. Now, can you please let me know whether the dinar is the functional currency or the foreign currency?
This is the functional currency.
No, I told you that whenever the transaction amount is given, it will always be given in the,
On foreign currency.
yes. So if it is already given in the functional currency, so there is no use of the question. Are you getting my point?
Yes.
So it means this will be a function, this will be a foreign currency. Okay, that transaction arises on 1st January 20x1 and the accounting period ending on 31st December 2001. The machine is held under the cost model again and has a useful life of 20 years. The entity has a reporting date on 31st December 2001. A functional currency law. Come on, okay. The information is given over here. The functional currency is dollar and exchange rate are there. First of all, we need to identify the functional currency, and we know that the functional currency is dollars. Now, second point is we need to identify whether the functional currency is strong or weak. So yes, the dollar is strong or weak.
The dollar is strong.
Yes, as always. And then we are going to translate it. What we are going to do, what is the carrying amount of the machine at 31st December? I told you that machine will always be recorded at a reporting, at which rate? Historic rate or reporting rate?
The reporting rate.
Machine is a non-monetary item.
But wouldn't it be divided by two?
Very good. It will be. It means it's an historic rate, right? It's a spot
Right.
rate or it's a historic rate. Historic rate is basically the rate at which the asset was purchased. This 31st December is basically the reporting rate, or we can also call it as closing rate, right?
Right. Okay.
So it means machine will be measured at its historic rate, and the historic rate is 20 million dinars, and we are going to divide it. Why? Because it's strong, and the converted amount should be lower, right?
Lower. Yes.
So once we will divide, it will bring $10 million, right?
Yes.
So it's $10 million. Now, what you have made the blunder that you recognize that property or you recognize that machine at 1st January 20x1. So what we are going to do, we are going to calculate the carrying amount at the end of the year. So definitely we will be ignoring that $3 or we are going to ignore that one. But what we have to do, we have to calculate the depreciation for the year. Isa, are you getting my point?
So we multiply 19 over 20.
Yes, first of all, we need to calculate the annual depreciation. So 20, 10 divided by life 20 years.
Yes.
So we'll get the annual depreciation. And
Yes.
what is that annual depreciation?
0.5 or 1 over 2.
Yes, 0.5, that is 1 over 2. So what is going to be the carrying amount? What is going to be the carrying amount? What is going to be the carrying amount?
10 minus 0.
That is $9.5 million, right?
Okay, I thought we would have to do it by 19 over 20. Remove a year of the asset.
Can you please repeat it again? What did you thought?
I thought it was going to be like 19. We remove 1 year because 1 year has been completed. So 19 over 20.
No, no, no. Always remember the depreciation. The formula to calculate the depreciation is cost divided by estimated useful life in years. It's not remaining life.
All right.
It's estimated useful life. That is the total life. It's not remaining life. So we'll be dividing it by the total life. That is the 20 years.
Okay.
Are you getting the point?
Yes.
So 1 year we have already used. Even if I ask you for, okay, let's move on. If I ask you what will be the carrying amount at 31st December 20x2, what will be the carrying amount? What will be the carrying amount at 20x2? Yes, please.
It will be 9.
Excellent. Perfect. What we'll do, we'll calculate the depreciation for another year, and that will always be equal. That is 0.5. So the carrying amount would be 9 million. Are you getting my point?
Yes.
So this is what you have to. Now, you might have a question in your mind that why we didn't calculate the depreciation over here. There are two reasons. Number one, first of all, why we didn't calculate it, the depreciation in this question. Okay, can you answer this question? Although we purchased that property or land on 30th June 2001 and the date of reporting is 31st December and the requirement was quite same, we need to calculate the carrying amount of land. So why we didn't calculate
Because a whole year hasn't passed.
It's a date of reporting is 31st December, and we bought that asset on 30th June. It means we might have proportionate that as depreciation for 6 months. Think about it. Just read the question properly. At least the starting two lines. Why
Because
we
it's land.
excellent, very good, shabash, very good. It's land, and we do not depreciate land. If it would be a non-current asset other than land, like furniture, equipment, machine, so we must have calculated the depreciation for 6 months. Aiza, are you getting the point now?
Yes.
Good. Okay. Now try 286. It's an OT case, and we are selling those goods. Okay.
Okay.
This paragraph is irrelevant. Just leave that one.
All right.
Try this question and do let me know. 286. Have you read the requirement?
Yes, I've read through it.
Okay. What did you get from that requirement?
So they've mentioned a couple of transactions and then the exchange rates for that, but they want us to find the exchange gain or loss.
Mhm. At the date of reporting or the date of payment?
Day of payment.
At the date of at the date of reporting.
Okay, day of reporting.
Yes, it's 31st of December 2000, which is the date of reporting, right?
Right.
Can you please let me know either the transaction date? Which one is the transaction date?
It's first September.
Nice, very good. And the reporting date is, and the date of reporting is.
1st October.
Reporting date,
No,
reporting
sorry,
date.
31st December.
And what is that 1st of October?
It's another date for what? It's the receivable date.
Yes, it's a settlement date basically, on which we are receiving some partial payment.
Yes.
Good.
It will be option C.
Option C, it's a loss of 250.
Yes.
Okay, let me try it. Let me try the same question and please do guide me, okay?
Okay.
Okay. Whence buy and sells goods in cromets, but as a functional currency is dollar. It means it's quite clear that the functional currency is dollar, while the cromets is the foreign currency. Once purchase goods for 10,000 cromets, which is the foreign currency, on 1st September 20x1 at whence year and is 31st December 2001, this amount remains unpaid, which means at 31st December 2001, the 10,000 kromet amount remains unpaid. Now, that is something the goods were purchased. Now, this is the purchase transaction, right?
Right.
Okay. Once sold goods on 1st September 2001 for 60,000 kromet. This is now the separate transaction. This is basically a sale transaction. uh, it sold goods on 1st September 2001 and on 1st October when it's received 30,000 kromet, it means they received the amount from the customer. The remaining 30,000 kromet is unpaid at 31st December 2001. So there are two different transactions, that is the purchase and sales. Now exchange rate is given. First of all, the functional currency is dollar.
Yes.
State if the dollar is weak or strong.
It is strong.
Very good. So the translated amount should be higher or lower?
Lower.
Good one. Now, let's read the requirement. What gain or loss should be recorded in the statement of profit and loss at 31st December 2001 in relation to the payable recorded for the goods purchased? It means we are here to calculate the exchange on gain or loss, not for the sale transaction, but for the.
The purchase.
Are you getting the point?
Yes.
So for this requirement, this second paragraph is irrelevant for us, right?
Yes.
So now, first of all, let's record the accounts payable on 1st of September. So on 1st of September, we must have recorded the 10,000 kromet.
Yes.
Either we are going to divide or multiply
Divide.
by 10,
Yes.
because on 1st September the exchange rate was 10. So it's 1,000,
Yes.
$1,000. And on 31st of December, the whole amount is unpaid, right?
Yes.
So it means the account payable will be $10,000, 10,000 kromet divided by what?
8.
Very good. Excellent. So it's on 31st December. So what is going to be the amount?
1,250.
1,250. So it means the liability is increased or decreased
It's increased
by.
by 250.
It's a
Loss.
excellent. Very good, Isa. Shabash. Can you do that one? Now, this is the same requirement, but it's a different. And what is the different? That now we are going to calculate the gain or loss that should be reported at 31st December. Now, this is for the sale transaction, right?
Yes.
So it means now the first paragraph is irrelevant. Now the second one is going to be relevant for us.
Yeah.
Can you try this one now?
Okay.
Are you done with that one?
No, yeah, I'm kind of confused on this one.
Why? It's quite simple. That first of all, uh, can you please let me know the outstanding amount in Cromets at the end of the reporting date?
30,000.
Excellent. It's 30,000, right?
Yes.
30,000 Cromets at the end of the reporting date. And obviously, this amount was recorded at the historic rate.
Yes.
And what was the historic rate? First, the transaction arised on 1st October, right?
Yes.
No, no. It's on 1st September. We sold goods on 1st September. So the 30,000 was recorded at $3,000.
Yes.
And at the end of the reporting date, now the outstanding amount of 30,000 will be translated or retranslated at what rate?
10.5.
Why 10.5?
Because that was the date that it was left outstanding.
No, we are calculating the exchange gain or loss not at the settlement date, but we are calculating the exchange gain or loss on the reporting date. Are you getting the point? We are not
Yes.
calculating the exchange gain or loss on the settlement date at what will be the amount of exchange and gain or loss on 1st October. We are calculating the exchange gain or loss at the reporting date. So at the date of reporting, the outstanding liability was 30,000 cromets. And once it was converted into dollars, so it's $3,000. And outstanding liability at the end of the reporting date is now 30,000 cromet, but the exchange rate is $8, right?
Right.
So what will be the converted or the translated amount?
3,750.
3,700 and
50.
are you sure for this one? 3,750?
Yes.
30,000 divided, yes, 750 and it's a gain of 750. Wait,
I think we have to compare when we divided by 10.5 as well.
no, then in relation to the sale of goods. Okay. First of all, we had a sale of 60,000 cromets, right?
Yes.
60,000 cromets, and the exchange rate at that date was
10.
10. So it was $6,000, right?
Yes.
Okay. This was on 1st of September. Yes, it was on 1st of September. And then on 1st October, we received cash, and the amount of cash that we have received is 30,000 cromets.
Yes.
Okay, 30,000 chromet, 30,000 chromet. We received an amount for 30,000 chromet, and the value of 30,000 chromet in terms of dollar was $3,000.
Yes.
But since we received the amount, the exchange rate was on 1st October. It was 10.5.
Yes.
It's 10.5. Can you please identify the amount? 30,000 divided by 10.5.
2857.
2857. Now what happened that we were about to receive $3,000, but because of the change in the exchange rate, we received an amount for 2857. Let me repeat it again. The total we sold goods for $6,000, but on 1st October we received the half of the payment, that is for $3,000 we received an amount of 2857. Now can you please let me know whether we are having a gain or loss?
It's a loss.
It's a loss. Can you please calculate the loss?
143.
143. 143 is basically a loss, and this is the exchange loss on settlement date. This is the exchange loss on the.
Settlement date.
Okay, now let's move on to the last date, that is the reporting date. On 31st December, the outstanding account receivable was 30,000 chromet, and it was measured at its historic rate at $3,000, right?
Yes.
And now at the date of reporting, now the outstanding account receivable is 30,000 chromet, but the exchange rate moved to $8, right?
Yes.
So 30,000 divided by 8, it's 3750.
Yes.
Now, whether the account receivable is increasing or decreasing,
It has increased.
it has increased. It has increased by
750.
750. So it's a gain or loss?
It's a gain.
It's a gain. Now it's an exchange gain. Now this exchange gain is at the date of reporting, right?
Yes.
Now, what is the requirement? I just didn't see the requirement properly. The requirement is that we are going to calculate the gain or loss. We are going to calculate the gain or loss, and now the gain or loss to be reported in the statement of profit and loss for the year ended in relation to the sale of goods. It means we are going to calculate the net or the total gain or loss. However, in the question number 286, we are going to calculate the gain or loss that in relation to the payable only. Are you getting a point?
Yes.
Here it was calculating, or here the examiner instructed that we need to calculate the gain or loss on payables only. It was not required for the whole gain or loss, but here it is required that we are going to calculate the gain or loss on the complete transaction on that particular sale of goods. Are you getting a point?
Yes.
So it means we are having a loss of 143 and a gain of 750. Can you please net it out? So
It's
it will be a gain or
607.
loss. It's going to be a gain or loss.
It's going to be a gain.
Yes, because the gain amount is higher. So 607 is the gain. 607 is the gain. Are we getting the point now?
Yes.
Is it clear to you now?
Yes.
Okay, do that question now. 181.
Okay.
Here you need to calculate the receivable balance at the end of the reporting date, right?
Yes.
Now, first of all, you need to identify your functional currency is strong or weak.
It is weak.
Yes, it's weak. So the translated amount should be,
Should be higher.
and how you're going to have a higher amount by multiplying it or by dividing it.
By dividing it.
Yes, getting the point.
Yes. So the receivable amount we use 125,000.
Yes, very good. 125,000 pounds. And in terms of, if you need in terms of dollars,
Yeah.
what will be the net answer?
We divided by the reporting date one, right? 0.85.
Yes,
So it will be 147,059.
yes, 147. It's nearest to 1,000, so we are going to type it 147,000.
Or
Are you getting the point?
yes.
Did you got to know that how we are going to solve these questions?
Yeah.
Please try to attempt the leftover questions, and do let me know if you face any difficulty or if you have any problem.
All right.
Got it?
Yes.
Now, what are you going to do next? I have given you IAS 40, right? Other than
Yes.
this. So obviously you'll be doing that one. So IAS 40, and also try to complete question for IAS 21. Okay,
Okay.
IAS 41, and then IAS 36. Okay,
Okay.
sorry, IAS 40. I have given you IAS 40 or IAS 41. IAS 40, I guess.
Yeah, as for investment property.
Investment property, yes, investment property, and then IAS 36.
All right.
Got it. So we will be having a discussion on these two topics in the next class.
All right, sir.
Okay. So are you comfortable with classes?
Yes.
And I think